Hi guys, Kamaljeet back here today to teach Cambridge O Level October-November 2021 paper. Most of the students are writing the exams in a few weeks of time. So I just thought to do this paper because it will be very useful. If you have not followed my channel is all about Cambridge Edexcel Accounting, Economics, Business Studies, complete explanation at free cost. You can watch the entire video. You can see my playlist, how much of videos I have uploaded for your exams. Get ready for A level and O levels by seeing my videos. And if you are not subscribed my channel, click the bell button and hit the subscribe button so you can learn with me more in future. With that, we are going to do the question number 1 on this video. So watch the entire thing. It's a very easy accounting part which you are going to do. Sales control account and the purchase control account on question number 1. So you can see here, the first question says that Aisha is a trader who maintains a full set of accounting records. Let me take my annotation bar. Aisha is a trader who maintains a full set of accounting records and prepares control accounts at the end of each month. She provides the following information for the month of August 2021. On 1st August 2021, sales ledger control account debit balance was 9,800. Sales ledger control account credit balance was 420. Purchase ledger control account credit balance was 7,700. And then they have given the totals of the month. Why I'm reading the entire thing? If you're doing accounting paper, you just need to read the entire thing. Maybe 1 minute or 2 minutes you need to spend on reading. Then when you're doing the sum, it will be much easier for you to score better on your exam papers. So totals for the month they have given: credit sales 88,850, credit purchase 55,400, cash purchase 8,860, receipt from customers 82,100, payments to credit suppliers 50,600. Discount received 600, discount allowed 900. Irrecoverable debt means is also known as bad debts. So they are meaning bad debts under the term of irrecoverable debt written off, which is 300. Provision for doubtful debt 450. Sales return 2,400. Interest charged to customers on no due account 90. Contra between sales ledger and purchase ledger. So contra accounts means set off entries. So when you have a set off, you need to set off on the credit side of the sales ledger account and debit side of the purchase ledger account. If you are not having any idea about purchase ledger and the sales ledger control account, the link is there in the description. You can click the control accounts entire explanation which I have made. It will be giving you a complete understanding how to do a purchase control account or sales ledger control account. So you just need to have one sort of idea when you're doing this. Some sales ledger control account is debtors receivable account and debtors receivables account and or receivables account. And if you take purchase ledger control account, it's creditors, payables or payables account. So now what is this difference between sales ledger and purchase ledger? Students ask, so sales ledger and purchase ledger, what's the main difference? Sales ledger, sales control account ledger is not sales ledger, because sales ledger is the normal income account. Here sales control ledger is completely different. Why is it? Because sales control ledger is taking the entire picture of the debtors. But when it comes to purchase, I mean, the same way, purchase account and purchase control account is not the same. Purchase control account is taking the entire picture of the creditors in one book, as well as purchase account is just a purchase account. Like when you purchase a good on credit, you will be recording in it. So you should not get confused between sales control account and sales account, purchase control account and purchase account. That's just that. Keep that in mind so you won't forget it when you're doing the sum. So let's start the sum without wasting your time. If I am very fast in explaining this sum, please use the video in this YouTube video. You have a chance of making the speed 0.5. That speed limit you can make. If my explanation is very faster, go in 0.5, so that will be able for you to understand in a much better way. So let's move on to the point we want to learn. Required: prepare the sales ledger control account and the purchase ledger control account for August 2021. I missed the important point. The sales ledger control account credit balance brought down on 1st September 2021 was 350. So on the next month also they have a balance on the credit side, but it's sales ledger control account. So we can prepare that. When you are preparing, I'll say where it should come. Prepare the sales ledger control account and the purchase ledger control account for August 2021. Balance the accounts and bring down the balances on 1st September 2021. So let's start the sum. They have given the format here: sales ledger control account and purchase ledger control account. I'm going to take my Excel sheet to do this sum. I'm going to screen share every time I'm going to take this information. I'm going to screen share and do it with you all. So I hope you all can see my Excel sheet in a while. So let me take you all to my Excel sheet. You all can see my Excel sheet, how it looks like now. So it is sales journal and purchase journal which I have taken here. On the sum, they are given. They are not given specific dates. You don't want to put the dates and waste your time. Just though they have given a format, you guys can see a date format is there. So when you are doing the brought forward and the carried down balance, you can write the dates. Don't write for everything. Or if you feel like you won't write the dates for everything, write the month end, which is 31st of August for all the transactions. If you feel like that's the way. So I'll do with the dates, so it will be easy for you all to have an understanding and an analysis on what we need to do. So let's move on to the sum and start doing the sum together. Let me start with the first one. On 1st August, sales ledger control account debit balance was 9,800. So I'm going to take the brought forward balance because the sales ledger control account debit balance. So in sales journal, it's not sales journal, guys. It should be sales control account. Okay, so I'm going to write here sales control account, and then I used the old format. That's why I have written the wrong account. Purchase control account. So under sales control account, the debit balance, how much is debit balance they are given? 9,800. So I'm going to write here 9,800, and then it is a brought forward balance. I can write the date 1st August brought forward. Easy as that. So now we are going to move on to the next part of the sum and start doing the next part. Sales ledger control account had also, they had a balance of credit balance 420. So I'm going to record that 420. Same 1st August brought forward 420. You don't want to write August in exams. You can just write 10/08. Then we'll move on to the third part of the sum. What does it say? Purchase ledger control account credit balance is 7,700. So I'm going to record purchase control account also. So you might have a confusion. So do we need to do the sum parallelly when we are doing a sales control account, purchase control account? It is not a big hard thing to understand. These are very easy thing to get it into mind. So it's better you can do both parallelly. So you'll save a lot of time on the paper. So purchase control account, I'm going to write here 1st August. On the credit side, because it's a control account and it is purchase control account, which is trade payables account, complete together. So trade payables is a supplier, credit supplier always comes on the credit side because it's a liability. So then we have 1st August again, we have a brought forward balance. How much is that? Let me see the amount again. It is 7,700. So I'm going to record here 7,700. Easy as that. So we have recorded almost the basic stuffs. Then we are moving on to the next part. Credit sales 88,850. So credit sales is sales means sales account credit, debtors account debit. So this is a debtors account which I'm meaning sales control account. So I'll take credit sales on the debit side of the debtors account, which is 88,850. So I'm going to record here 88,850, and then here I'll record it as sales. I'll write the date at last because the same date is going to come for every adjustment which we are going to do. Then we move on to the next part. Credit purchase 55,400. So purchase account debit, creditors account credit. So here purchase control account is a credited account. So I'll write here purchase 55,400. I think that's the amount they are given. Let me recheck it. 55,400. So I'm wrong on that. I'll just change that value 55,400. Then we move on to the next adjustment of the sum. What do we have? We have cash purchases 1,860. Now there's a big confusion between the students. Do we need to take cash into the books of accounts? Never take cash into books of accounts because it is a credit transaction which we are speaking about. Sales, credit sales which we are recording, and purchase, credit purchase which we are recording. So don't take cash purchase into credit purchase and credit sale. So exclude that. Then we move on to the next part. So exclude this. Don't take this into your mind and waste the time. Then we have received from customers. You can either consider it as cash or either you can consider it as bank. So customers are credit customers, which is this customer. So when customers pay, we receive money. It can be either cash or bank. So I will consider it as bank because they are not given any terms of cash. So bank, how much did they pay? Why the bank comes on the credit side? Because when we receive the money, bank account will become increasing on the debit side, and debtors account will decrease because they are making the payment and their value goes down. Then we move on to the sum. What do we have? We have received from customers 82,100. I'm going to record that. Easy as that, guys. 82,100. Recording done. Then we move on to the next part of the sum. It says that payment to credit supplier. So when you make payment, your cash account or bank account is decreasing. So asset decreases credit. So then we will record it on the opposite side of the control accounts. As purchase account, you should always record it on the opposite side. This amount will be on the debit side for your understanding. So I'll record that in debit side. What's the amount? 50,600. So I'm going to record it on the debit side. 50,600. So the amount, it can be either bank or cash, you can record. It's not a problem. It's not a problem at all. Okay, guys, we'll move on to the next part then. So then we have payments to credit suppliers done. Discount received. Discount received, you get when you make payment only, you get a discount. And when you allow discount, you are allowing it to the debtors, because when you are selling something and when you wanted to get the money from the customers, you will allow a discount. When you are on the other side, when you are paying something, then of course your creditors will give you a small discount because you are making the payment on time. Then we have discount received 600. Yeah, let me see, is it 600? Discount received is 600 and discount allowed is 900. So I'm going to write discount received under purchase control account as discount received. If I don't have space, I will make it a bit bigger, this column. So I'll make this bigger. So discount received 600 and discount allowed is how much? Discount allowed is on the credit side of the sales control account. It is 900. Easy as that. So we have recorded the basic stuffs. Yeah, basic stuffs. So I'm gonna make this a bit visible. We'll move on to the next part of the adjustment, guys. What do we have? We have irrecoverable debt written off. So irrecoverable debt is also known as bad debt. So I'm going to record bad debt. How much is bad debt? So bad debt is, so let's record bad debt. The bad debts amount is going to be, bad debts amount is 300. So irrecoverable debt is also known as bad debt. So I'll record that 300 as well in this part. Then we move on to the next part of the adjustment. So you can either say irrecoverable debt or bad debt, but both are considered as the same term in exam, so it doesn't matter. As it is consuming a lot of space, I took bad debt as 300 rather than irrecoverable debt under the debtors control account. A bad debt is a cash which you need to receive from a customer, but then the customer was bankrupt or he has gone somewhere, he didn't give you the money back, so that becomes a loss for you. That's the reason it's credit on debtors control account and debit on an expense account as bad debt. So then we move on to provision for doubtful debt. This is to confuse you. They have given provision for doubtful debt adjustment comes to find the under expense and over expense and under expenses. But then here we are not going to do that because it's not a provision for doubtful debt adjustment. We are just doing the control account. So they are just giving this to confuse you. Don't get confused. If you have provision for doubtful debts in a control account, don't take it into mind. Only bad debt is the main rule. I have taught you under the chapter number 14 how to attempt the provision for doubtful debt adjustment. For now, just remember, if you are having a control accounts to do, what you need to prefer is the bad debt, not the provision for doubtful debt. With that mind calculation, we are moving on to the next part. Sales return 2,400. So sales return is also known as return inward. So return inward means like the customer is sending the products towards the business. So we will record it on the credit side because when they return, you can either say return inward or sales return, both are same. So that's 2,400, right? So record it as 2,400. Then we move on to the next part of the sum. What do we have? We have interest charged to customer on overdue account. So when you charge an interest for overdue account, you should always remember to record the interest charge on the debit side of the account. The reason when you are charging an interest, it is a addition to the credit customer. The credit customer is not making the payment on time. So you will charge an interest to get the money back from him. So it's always a debit side balance. So you write here interest. Easy as that. Then we move on next part of the sum. We have contra between sales ledger and purchase ledger. So we have a contra entry. So if it is a sales ledger and purchase ledger contra entry, you need to know it is a set off. So set off, I said like debtors control account, it should be credited, and purchase control account debited. What is this set off? Set off is like the sales, I mean the debtor is having a interaction between the creditor. The debtor is purchasing, I mean how do you say, in an easy way, we are business, we are selling for the customer, and also we are purchasing from the same customer. If we are selling for the customer some goods, the customer is in our books is a debtor. If the customer is selling some goods to us, the customer in our books will become a creditor. So when two transactions are happening in one account, we say it as a set off entry. So to adjust that, rather than paying the money, you will set off, because the debtor and the customer is the same, so you will set off from the sales control account credit and purchase control account debit. If you don't understand set off, don't worry guys, just remember if it is a set off, sales control account credit, purchase control account debit. So I'm going to write here what's the amount which we have, 2,920. So I'm going to record that 2,920, and here I'll write set off. Credit side on the sales control account, because the value is going down. When you set off, your value should go down, and then 2,920. Easy as that. So we're almost done with the sum. We have one more balances to adjust. What's that balance they are given? They are saying that the sales ledger control account credit balance brought down on 1st September 2021 was 350. So the beginning starting balance on the credit side on the next month was 350. So I'm going to finalize this sum and then put this 350. So we'll have an overall view of what I have done. So I'm going to take this total balances in both sides. Yeah. So I'll keep it a bit lower so we can set off it. We have carried down balances to good. Right. Now I'm going to take the total. You guys can see the total. I'm going to take. There's a carried down. I mean, the next month it becomes brought forward. So we have a carried down balance here 350. Now, why did I take 350 on the debit side? Because they are saying on month of August, the credit side balance, beginning of the month, you will have a balance of 350. So if you wanted to bring the balance brought forward on the credit side, if you wanted to bring the balances on the credit side, you need to bring that balances from the debit side. That's simple. So I brought this carry down on the debit side to the credit side. So when you're bringing the credit side balance, I mean debit side balance to the credit side, you should always see that that balance should be on previous month, should be on the debit side. So here I'll write 31st August. I can copy the same thing because I said you don't want to write it twice. It's a waste of time. I'm gonna copy here as well. So now I'm almost done with the sum. I'm going to take the total. So once I take the total, you can see my entire total is around 99,090. You can see my cursor. So 99,090. So I'll take 99,090 to both sides. You all know how to balance a ledger. Then I'm going to deduct the entire balance. What's this balance? 428, 2,100, 900, 300, 2,420 is giving me a balance of 89,040. So I'm going to take 99,090 and deduct 89,040 to get a balance of 10,050. So this is the carry down of 31st August on the credit side. So this carried down will become the debit side overall brought forward balance for the next month. Okay. We'll copy this. I'll write 1st September brought forward 10,050. Then we move on to purchase control account to finalize this the same way. So I'm going to take the total in both sides, total column. I'm not familiar with this laptop. It's a new laptop I'm using today. So don't think wrong, guys. If my adjustment goes here and there, my cursor. So now I'll take the total balance of 7,700 plus 55,400. I'm having a 63,100 balance in both sides. Okay, so I'm going to deduct the credit side balance to know the overall balance of my sum. Here on my debit side, I'm having a 54,120. So I'll take 63,100, 54,120. How did I get the 54,120? I added 50,600 plus 600 plus 2,920. I got 51,120. So I took the 63,100, deducted the 52,4,120 to get a balance of 8,980. So that's the carried down balance. Again, I can put the in date, so it's easy for me to copy and paste it here and here as well. So now I can bring the brought forward balance on 1st September. Brought forward how much, guys? 8,980. So now we did a sum, almost 14 marks worth of sum. You guys can see what is the marks they are giving. Sales ledger control account and the purchase ledger, 14 marks. So it's that easy for you all to understand and do a sales ledger control account. And if you know how to do a sales ledger control account, guys, trust me, you can score a lot on your exam. So we'll move on to the next part. There's 6 more marks sum which we wanted to adjust it. So give me a second. Let me. So the B part is giving you 4 marks and they're asking name the book of prime entry which Aisha would use to obtain the following information when preparing her sales ledger control account. So you all need to remember that there are 7 prime entry books which you would have learned. It is starting with cash book, petty cash book, sales journal, purchase journal, then return inward journal, which is also known as sales return journal, and purchase return journal, which is also known as return outward journal. And then the 7th journal is the general journal. So if any adjustments doesn't come on the first 6 journals, you should always record it under general journal. Again, let me move on to the point returns. So returns means where do we record? We should record it under sales return journal. So I'm going to record here sales return journal. Then where do we record discount allowed? Where do we record the discount allowed column? We should always record discount allowed under cash book. And then interest charged to customer on overdue account. Where do we record this? We should always record the overdue account balances under general journal, because these things we can't record it under normal books of accounts. Then we have contra entry is also we record it under general journal. Now, how do I know that these entries are coming to general journal? This is a basic question the students might have. You need to understand one particular thing, guys. When it comes to returns, it was a sales return journal because they're speaking about sales here. So we can directly go on to that. Discount allowed is a cash book. Discount received also comes under cash book. But other than that, you might say, if I say interest charged to customer on overdue account, can I take it under petty cash? No, it's not a small petty transaction. Can I take it under cash book? No, because we can take discount and discount received, discount allowed and discount received, then we can't take. It's not a sales, it's not a purchase, so we can't take sales journal and purchase journal. And it's not a return, sales return inward or sales return outward. So I mean purchase return outward. So now by seeing all this, we can't take for all the 6 account means, then you need to record it under general journal. This is how you find out which journal entries which you need to take when it comes to a prime entry book. And the next part we need to discuss, so just 2 reasons why the sales ledger control account had a credit balance of 420 on 1st August 2021. When we started the books of account, you all remember when we did the sum here, there was a balance brought forward. I'll show you. Yeah. There was a balance brought forward on the credit side. So the examiner is asking, why does the balance brought forward comes on the credit side? What might be the reason? You all need to understand one particular thing. A customer can pay you a big amount in advance sometimes. A customer might, get a discount. Later, he has made the payment. So at that time, what you need to do, you need to adjust. You need to consider the money which you have received in advance as a payment on the credit side of books of account. So most probably, either they pay it in advance, you can say, or they got a discount, later they pay. So which means they have missed the discount balance will come as brought forward on the credit side. So we can easily say here, 2 reasons. Made an advance payment. Then also second reason you can say, receiving a discount after making the payment. After making the payment. So that's all, guys. Question number 1 comes to an end from 2021 October, November 7707. We'll put the second video very soon, the question number 2, maybe in 2 to 3 days of time. But then if you really like the video and the explanation, if I'm very fast, go slower on the slower content. And watch my other videos in my playlist, where I have a Cambridge playlist for students who are targeting OL exam. You will learn a lot of things under that for business studies, economics, and accounting. If you really like the video, subscribe to the channel, and also please do not forget to hit the bell button. Have a nice day, guys. See you soon. Get ready for exams and do best.